Boom, boom. It's earnings week. It's earnings week. Good morning. I'm going to build upon the choose you who can participate. Set a delay between messages. Close. I don't care about moderation. I guess it delays me anyway, but because I just hit start and it's waiting for me to join. But we're going to do live chat. Good morning. I'm going to start my scans. Market scanner. This is TrendSpider. Morning, Joe. I am still under the weather, but your boy did 20 miles, 23 miles over the weekend. Not running. It was the 55 plus active walker situation. It was power walking. I like 13 minutes, 12 to 13 minutes a mile. So I don't want to say it was running, but the miles got put on the body. So scans, we're going to do SQ. Square got in there. Let's go to the core investments. God, it's been a while. So my apologies if I miss something or do something. Or levered ETFs. Let's see if anything popped up. Low cost Vanguard. And if I didn't say good morning, Joe, I think I did say it, but we've got people coming this morning to do the floors in the house. So I've got to get going. It's going to be back in Atlanta later this week for a week, so I'll have some good shows. Ooh, Norwegian crossed up. We're going to do that. Do I care about Annaly Capital? This is a big dividend stock, by the way, if you didn't know. Annaly Capital. What do they have? Let's see. NLY, what's there? It's not that big. Oh yeah, it is 13.44%. But look, I mean, this is just since September. Since the October low, you're not up a tremendous amount. I guess you are. Half a year, 13%, but you're down 27% year in 1 year. I keep looking outside to see if I see anybody. Annaly Capital, I won't put it in. You know what? Let's put it in there. For dividend lovers. It's the Virginia of dividend stocks. It's for the lovers. Let's look at ARC Holdings. Do I see anything? HubSpot. HubSpot hosts one of my favorite podcasts, My First Millions. I don't see anything that I love. By the way, when gene coding comes around and it with the inevitable hype that it actually deserves, DNA is going to be the symbol. You know how AI just picked off and picked up? DNA is going to be that symbol. I don't see anything in the ARC funds I love. It's earnings week. We've got enough. Procter & Gamble, PG, which just had their earnings and blew it away. So they were up like 3-4%. Your boy owns one share, maybe two shares in my Weeble. And if you're hey Brian, good morning. Yeah, it's been a while. I think it's been a week. This is a NASDAQ 100. I don't even know them. Constellation Energy Group. That's a decent one. And Mondelez. Mondelez is a good one. And hey, we're in the season of resigning when you have an affair. Let me just tell you, the douche that at Comcast or Peacock, I don't know where he's from, but the guy's privileged, married, and gets a golden parachute. What a dick. Just a total dick. And CL. Okay. And the question is, do I continue down the energy path? I don't know. I'll continue scanning it. Netlist. No, I didn't check it out. Christian, I have been so freaking out of it. My head's still out of it. I haven't checked it. Let's look at Netlist. Oh, I'm going to go into the strategy tester. Screw energy. We ain't doing energy. We're going to do Netlist. There we go. NLST. It's over the counter. It's tiny. Guy, if you got in at that $1.19. Christian, tell me you got in at that $1.20, $1.19. Beginning of January. I mean, it's still running since beginning of January. That ascending wedge is great. I mean, it got you out with 175%. Let's see. There's nothing in it. It's an over the counter, so it's not big at all. I just can't find anything. Finviz doesn't have it. That's crazy. Hit the thumbs up button, by the way. Okay, I'm going to start the podcast. And I usually do this. Maybe I'll do it the same way. Excuse me. I don't have water either. Literally, my notes today are sell in May and go away. Earnings. Go over the core portfolio. And then this chart. SPY versus QQQ versus DJI versus IWM year to date. And look at the 1 year. That's it. So I don't have anything to really go over. But that's the extent of my notes. I had a friend ask me, do you wing this? And I said, yep. I just find shit to talk about. Okay, let me... Before I get into this, let me just see if the dogs want to go out here. Oh, let's see. Okay. Yeah, now they're out there. I probably should wait for about 30 seconds because they're going to be right back here. Yeah, Cleveland Cliffs is... that has been a... And here it does this. And here's what you have to realize. I still think it's a $30 stock. It is reacting just like every other commodity, including oil, that if we go into a recession, this shit's going to get hit. Car manufacturers are going to produce less. Everything that you steal for is going to get used less, essentially, because shit's just going to slow down. Now, I should be listening to the algorithm, and I should have gotten out at this $17 point here, April 17th. I was sick. I think I was traveling, blah, blah, blah. So I haven't shown it. Their earnings are coming up today. Is it today after the bell? Let me see. Earnings reported. Let's see. Let's look at them pre-market. They are they're up 0.13. Let's look at their earnings. I know they'll post it here. I guess they haven't posted yet. I mean, here, upgrade. January, March. You've had some sales at about 21, 22, and 18. Nothing huge. Let's see. I can't see anything on there. Let's see if they have it here. Ticker CLF. I don't know how to use this. Calendar. They should be pretty high up, I would think. Is it? Oh, here we go. After market close. They report after market close. See, so here's this is one of the reasons why they probably will not. If they have a reduction of 12% in their earnings, expected revenue growth, they're going to get, earnings per share minus 21 cents. Now here, take a look at a weekly of this one. And so March of 2020, here's where you are in, before COVID, $7-8. What makes you think that they are worth that much more? Their business has been that much more. So they're producing more, they're doing more, they reduced their workforce, so their costs were down. The problem is that inflation kind of took them over. And yeah, I think Microsoft and Spotify are good. Microsoft's going to they're going to name ChatGPT about 15 times in their earnings, and you're going to see it pop, 2-3% just based on that. In fact, there's a new AI out if you want to search this one. Just look up Anthropic, here, I'll type it into the chat. Anthropic Claude. Let me do. Just Google that. Google that and you'll find pretty amazing stuff. Okay, let me look at this core portfolio real quick because this is what I'm kind of going to talk about. Look at Apple. If you bought it at 153, I mean, you got up here to 170 during this time. Amazon, I should buy it under 100. It's up over the 200-day now. You've got this one. All they're going to talk about is AI and robots. Boeing, we have this one. It's still holding on to that 200-day. Anything around 200 in my mind is great. Bank of America, I kind of pound the table that at $30, this is a good one. Cleveland Cliffs, it's outside. We'll go over Costco. I'll go over all this stuff. Costco at under 500 is great. Disney under 100. Devon, anything under $60, you should absolutely be buying. They do have some operational difficulties, so but it's going to get above that 200-day again. Google, I mean, just keep buying Google. Goldman Sachs, they had their earnings. They're going to be perfectly fine. Coke, their earnings came out. They did great, 45 cents to 68 cents. They're up 2%. Said buy it under 60. It's at 64. Meta, if this thing ever gets under 200, just load up on it again. I don't think it will, and their earnings are, I think, Wednesday, 26th, yeah. MPLX, This is just a great stock. Merck, they put off about 9% dividend. Merck is in the top. I think Merck still anything on closer to 100. Just don't buy it here. Moderna, trade it. Just trade it. It's under the 200-day at 140. Trade it, and then the hype comes out May 3rd. The hype train will go on that one. Microsoft, I think anything closer to 260 is probably a good buy on that one. NVIDIA, talked about NVIDIA here, 273. I don't think that's bad. Honestly, I think you cover this gap down here to 212 if we get washed out, but NVIDIA is just too good a stock. Oxy, anything, I should probably sell Oxy, take some profits at 61. PanW, this is Palo Alto Networks. Pepsi, their earnings coming up. QCLN, this one's just been kind of a dog. Not great. I mean, renewable energy just hasn't done super well. Qualcomm, you're under the 200-day. I think you can buy this one. Anything between 112 and 120. Roblox, almost under 40. Shopify, when it was closer to 40. Great buy. Anything under 50 on this one, I think you're fine. I think it's covering this gap up to 52. You'll make your 10% back there. Snowflake. Snowflake's got both this rising wedge and the kind of, falling wedge. It's kind of just, Snowflake's getting ready for a breakout, I think. Simon Property Group. I love this one at 120. It's at 110. Target, I think it's, going up to this gap again, 175. Tesla at 163. Probably add to it. Let me see. What's that? Google. Oh, yeah, you told me about this, Christian. Trial date of April 17th. Yeah. Netlist is that one that's suing them. There's somebody writing on Seeking Alpha about a whole thing. If you want to Google, just Netlist, Google. I'm holding Google. I mean, Google's one of those that I'll just add to. For tax reasons, I'll get out of Google, but other than that, probably not. Okay, let me start the podcast. Let me just make sure, yeah. Okay, we're going to start with SPY. We'll start with that. We'll start with sell Mango away. I'll start with my thoughts on that. Boom. Okay. I will. Good morning. It's Monday, April 24th. And if you can hear it in my voice, I'm still sick. So, literally to set the episode up, I'm going to go over 3, 4, 5 things. They'll be pretty good in topic length, probably, but the overall topics are sell in May and go away. What does that mean? You'll hear that saying over probably the next 2 weeks, 3 weeks, 4 weeks, however many weeks. The market may have to go down, blah, 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 whatever it is. You'll hear sell in May and go away. Earnings this week. It's a big week of tech earnings. So we'll go over some tech earnings. Not too many, but maybe I'll just go Microsoft and Google. And I want to go over the core portfolio. The one in TrendSpider. That if you are a subscriber to TrendSpider, I've shared with you. You can get it. No problem. It's in there. The other thing that I wanted to go over is just SPY versus the Dow Jones versus NASDAQ versus the Russell 1000. So let's go over that first. Here's the chart. I mean, this is year to date. SPY is up 8.24%. NASDAQ is up 19.71%. Dow Jones is up 2%. And the Russell is up 2%, 2.4%. So you've got these lines that are trailing. Either the NASDAQ has to come down, the SPY has to come up, or, IWM and DJI, which are both right around the same, they have to come up. I think you'll meet somewhere in the middle here around SPY. I think SPY at 8.24%. I think we may go down to 6%. I think the NASDAQ has the biggest fall, if you will. If you look at the 1 year performance, then the Dow Jones is just up 1 year. It is down 0.01. That is the best performer. The Dow Jones is down 0.01. QQQ, which is the NASDAQ, is down 5.25. SPY is down 5.9. And the Russell is down 10.2 because I think 60% of the Russell doesn't make money. You take a look at the 3 year. What's performing in the 3 year? They're all kind of in the same realm. They're up like 50% over 3 years. The Dow Jones is greatly underperforming at 43%. The QQQ is the greatest one at 54%. Then we look at 5 year, and you can see how good the NASDAQ is. 97%. So you can see in most of those numbers, the NASDAQ either will continue its outperformance or it will fall back. You look at the 6 month, the QQQ, the triple Qs are still greatly outperforming at 15%, say. Even over 1 month, you can look. And over 1 month, the Dow Jones is actually leading the way, 3.83%. SPY, 3.24%. You can just take a look at Seeking Alpha. It's free to do this. Just compare the charts. Simple, easy view of that. So sell in May and go away. What does that mean? Well, sell in May and go away means that, and I heard this from an analyst. It doesn't mean, hey, sell all your stuff in May and just go away. While you do that, it's been shown that does not work. I think it's like 60 out of the last 70 years. You would have wound up losing money, something of that sort, some crazy thing of that sort. It means that the summer, people go on vacation, traders go on vacation, hedge funds typically don't have a ton of activity, so there's less stuff going on. You can think of last year. Think of last year in May, we were down low, and then June had a fantastic month. It wound up losing it in the middle of June, going into July, and then August was bad, and then September, and we all know that the lows were hit in October. You can see that right here. The lows were October. But let's look at a monthly. We'll go to We'll go to a weekly so we can see the last year. Here is where 2022 started. And let's look at May. See May? It's kind of just floundering around. But you had June. Then in August and September. So what this analyst that I was listening to with sell in May and go away said was it really probably means go away in August and September. Most crashes that we've had in the market have happened between the August, September, and October timeframe. And then November and December are traditionally pretty good months, traditionally. So, yeah, I don't think you sell in May and go away. I think what you do is if you're looking at rebalancing and looking at an opportunity to maybe get rid of some of your losers and maybe add to your winners, then maybe sell your losers in May and then come back and start, rebuying them in the August time frame when it's weak. So again, you want to buy low, sell high. That's essentially what you're doing. So next thing that I wanted to talk about is the core portfolio. And let's take a look at some of the core portfolio on the 4-hour algorithm. The 4-hour algorithm is an algorithm in TrendSpider that I have that looks at some of these stocks. Just for instance, Apple, if you use this over a 2-year period, it's 1,000 candles and that's basically a 2-year period. If you've just bought when the algorithm told you to buy and sold when the algorithm told you to sell, you'd make 44%. Well, over 2 years, you've made 22%. You've doubled your performance. So the algorithm is in TrendSpider. If you want it, sign up for TrendSpider. I'll share it with you. I'll share you the 65-minute algorithm that we have, which is good for day trading. I'll share you this core portfolio that I'm going to go over with all these stocks. Apple's earnings are coming up May 4th, so they're not this week. They're one of the biggest. I think they're the largest company in the stock exchange. This drives the market. And I talk about it all the time about the button hook. And I know it's been a week since I was on here, so probably haven't heard a lot of my terms again. But the button hook is when it hooks over like this. You can see, look at this one. So this got you in January, and then it rode up here, and you had the button hook. And it button hooked and then just dove down. Well, the button hook may be happening here. Don't know. It's a big week of tech earnings. If for some reason Google, Microsoft, and others and Amazon start bringing down their projected earnings, maybe you'll see Apple follow and the button hook will happen. This has you in at 153. Right now you're trading at 164.70. It's down 0.2% in pre-market. In my mind, I think you want to buy this in the 150 handle. I don't think you want to buy it in the 160 if you think that this week is going to be a crazy good earnings. I just don't know. I mean, here's the thing. When you go and you look at FinViz, finviz.com, if you guys don't know, is the greatest website for all of your information. The PE of Apple is 28. The forward PE is 25. Year to date, you're up 27% in Apple. 27%. The average target price is 170. So you're trading right about the average target price. Do you think that there's stuff that's not priced into Apple, meaning the headset that's coming out in June, meaning the journaling app that's coming out in June, meaning the new watch OS and potentially a new watch that's coming out in June? And by the way, the headset is getting some mixed kind of reviews. I've heard employees have just totally trashed it. They don't think that it's worth it. I'm hearing it's going to be about $3,000 price point, which is crazy. But there was a reporter who had access to it and who absolutely said it's game changing. It is 100% the next Apple product that will absolutely take off in the wearables division. Believing that what Apple has done is use it is produce basically apps and things. So exercise. You'll be able to exercise with this, and the sensors on it will be able to tell how you're performing on your exercises. Meaning games. You'll be able to actually game significantly with the headset. Meaning the integration of a screen to watch movies and things on. The equivalent of movie theater style giant IMAX screens. So they believe that it's good. So, again, Apple, do you want it? I'd say kind of hold off. I'm not adding to it. I add to it on dividends pretty much exclusively. I'll probably trim a little bit of Apple when it gets to 170, honestly. in the next couple of weeks, if it gets to 170, I may trim some and just take some profits because it's taxable. And so I've got to sell some of my losers in order to, keep my income, but we'll go over taxes for another day. Amazon, I said get Amazon below 100. You're kind of hovering. The 200-day right here is at 95. Again, this is the 4-hour algorithm. So if you're looking at the daily, it's a little different. You got a gap here about 97. You'll have a chance to get this under 200 again. Their earnings are coming up April 27th, so Thursday. There's a gap up here at 108. Do you cover that gap? Maybe at this point you do. Maybe we have one more day of up. Right now it's up 0.57. All they have to do is talk about robots and AI, and job cuts. Maybe they talk about bigger job cuts and bigger savings. So that's typically what they're talking about. We have Boeing getting under 200. You'll be able to get this under 200. It's still an iconic company, but under 200 for Boeing. Bank of America, your boy here has added to it, but anything under $30, I think, Bank of America is absolutely 100% fine. They already had their earnings, 34 cents per share. They're 94 cents per share. They're perfectly fine. Even Jim Cramer says they're perfectly fine. I personally own it. I think this is at least a $40 stock. I just bought it around $30. I've added to it while it's below 30. $30 is your swing price on that one. Cleveland Cliffs is a little bit. I got sick and I traveled in between this one being a falling knife. I am still in it. I felt guilty. I didn't want to be on the, not doing a podcast and having sold it. I do have a small position. I bought, I think, at about 18 or 19 bucks. I'd have to look at it. But like I said, anything under 20, I believe you can buy. And at some point, I think you get up to 30. I was showing this on YouTube before. The danger that you have is when we go back and we look at pre-pandemic here. So here's the pandemic. Here's COVID. What was it selling for before then? It was between $8 and $10. So why do I think this is a $30 stock? Because it's gotten up there a couple of times. I think the valuation is there in a good economy. This is March of 2022. This was when we saw inflation. We saw things happening. These guys have cut their costs and increased their prices, successfully increased their prices. So when we look at this one on the algorithm actually winds up losing you 5%, but it outperforms because over 2 years, you'd lose 15% on this stock. So you lose 5% on this one, but I'd say there's good trades and there's bad trades in this. Meaning, if you got in here at 20, you didn't get back in at 20 here. You probably sold up here at 22. You didn't wait for it to, you got your 10%. So in this one, I think the algorithm underperforms, but I think just eyeing these charts, you could absolutely do it. Would I be getting in here? No, there's no confirmation. You have your earnings coming up today after the bell. I think they'll report a decrease in cost and an increase in profits. So I think you're fine. Cleveland Cliffs, I think you're fine. But I would probably not be in that one. If you have some losses, take your losses. I think it could go down. You don't want to hold and risk it. Costco, under 500. You're trading at 506. It's been under 500. This is a great company. Their dividend is coming up on May 4th. Their earnings don't come up until May 25th. You don't have a ton of catalysts around this. Their dividend is not huge. Let's see what their dividend is. It's a 0.81, so it's not even a 1% dividend. But under $500, you add to it. And I think you just hold this one. Honest to God, I just think you just hold this one. Disney, get it under 100. It's trading at $99.99 right now. If you get it under 100, just buy it. I think my average purchase price is like 110. I bought a bunch right around earnings, around 110. And I didn't sell it around 120 it got up to. But Disney's a great company. They are embroiled with some scandal in Florida, but they'll be fine. Devon Energy, they have some problems. You're seeing the button hook happen right here. The buy-in was at 48. You're at 53, so you've got your 10%. Get out. If you're in there, I would say get out. Don't wait for the second leg. But I hold and I think my average purchase price is somewhere in the neighborhood of 53. This is a long-term hold, and the reason it's a long-term hold is their dividend's not in danger. Their dividend is 9.44% yield. So I hold for the long term because I do sell based on tax situation. I hold this in an after-tax account and a IRA. The IRA I get in and out fairly regularly. And so I've sold out of the IRA just because of this button hook. I took my 10%. Yeah, I've been screaming about Devon. I think anything under 60, I think you buy. Anything, specifically under 50, you load up on. Google, we buy GOOG because that's the better performing of the two. I have to redo that look again. But Google, their earnings are coming up, I think on Wednesday. Nope, tomorrow. Tomorrow their earnings are coming up. Google, all they'll mention is AI, how their Bard system's doing great, how they're going to integrate AI into their Office suite, into everyday search patterns, blah, blah, blah. You're going to see a pop. Under 100, load up on Google. There is and you can Google it. Christian brought up a great point. Netlist versus Google lawsuit. Google it. Seeking Alpha has a bunch of articles on it. You'll see it's a patent infringement lawsuit. It could be big, could be huge, could be a game changer. But I still like Google. Sell it for tax purposes. Don't sell it because of a lawsuit. But, the largest patent infringement in the history before was like $2.5 billion. They're saying that this one could outpace that one. But understand, I think it's one writer on Seeking Alpha that's writing all this. So they may be talking book. Goldman Sachs, they had their earnings. There's nothing crazy about this one. If you have an Apple card, sign up for the savings account. It's 4.5%, I think, is what you get. So if you use your Apple card, you get and you get your cash back daily, and then you're earning 4.5% as it's transferred into your savings account. It's run by Goldman Sachs, that card. So I think Goldman Sachs, once mergers and acquisitions start coming back, Goldman Sachs and JP Morgan will be the one. I chose Goldman Sachs, and the reason I chose Goldman Sachs is because JP Morgan has ties with Jeffrey Epstein. So I'm not a fan of what happened. I think top management knew exactly what happened. I think they did some shady shit. I'm not for it, so I'm not a big Jamie Dimon fan. Whatever. Coke, their earnings, they reported this morning, 68 cents per share. I said buy it under 60. If you got this under 60 back in March, where I was telling you to buy it when it was under 60, you're close to 10% on that one. It's a great company. I just buy and hold. I haven't sold a dime of Coke. I've held it for years. I think since I started drinking Coke in 1995, I wound up buying it. So I just buy and hold it. Meta, if it gets under 200, you want to buy this one. Their earnings are coming up Wednesday after the bell. He is going to talk about the efficiency as to how they're going to probably lay off more people. This one is just going up based on valuation. Remember how I said Apple was PE of 26? This one has a PE of 24, a forward PE of 17. If Meta is able to increase, and remember, they had a horrible 2021 and a horrible 2022. This is just a company that was beaten down from a $350 price. We'll go back and we'll look at the monthly. Let's take a look at the monthly. In October of 2021, they were trading to close to $400, $377. So you're just taking a look at that slide. It's only halfway back. So I think Meta, I'd like to see it under $200 for you to get it, but doesn't mean you can't add a little bit here at 214 just in case their earnings blow stuff away. MPLX, again, this is the core portfolio in TrendSpider, but MPLX, great dividend. I hold it. It's an energy stock. It's an 8.9% dividend, up 5.9% year to date. Name an energy stock that's up. Well, year to date, MPLX is. Their earnings are coming out May 1st. They've already had their ex-dividend date. They typically announce their dividend and earnings. It's at 35. I think you're fine. Merck, I'd like it to see you get it closer to 100. This is just a great company. I put it in here recently. mRNA, which is Moderna. This is due for a hype cycle, and their earnings are coming up May 3rd. This is an absolute 100% trade, and I think 140 has provided a couple of bounces here. You can see this one back in October, trading at about 136. They bounced all the way up to 215. So do I think that that's going to happen again? I think you'll get it 140. I think they're going to announce that they're losing money. So I probably would not buy it before earnings unless you start to see it go up. I would probably trade this one on the 65-minute algorithm. The 65-minute algorithm on Moderna for 8 months, because 1,000 candles only goes 8 months. You lose 9% versus losing 0.22%. But look at all those buys and sells. This is where it's just capitulating here. And you can't make money when a stock capitulates like that. So I'd probably trade it on the 65, but be a little bit smart. Buy it under the 200-day where it is, and you could probably hold it. Again, that's a hype stock. Is it going to zero? Probably not. Microsoft, all they'll talk about is ChatGPT. 100% all they'll talk about is ChatGPT. It's at 284 right now. I think anything under 260 is your target. Do I think it's getting under 260? I don't know. I mean, the AI trade is so strong, which brings us to the next one, NVIDIA. This one, I do think that there's this gap down here about 211, 223. I think if it gets to the 250 mark, I think you load up on this one. This one has just been a monster. Let's see. NVIDIA year to date, up 85%. In 1 year, you're up 26%. In 6 months, you're up 125%. That move right there has just been historic. Their PE is 155. So is it possible they come back? Absolutely, it's possible they come back. Absolutely. Oxy, Occidental Petroleum. I have this in the core portfolio. I say 60 is your swing. You're at 61.81. You saw that button hook. The algorithm has you out. Probably get out. The earnings are coming up May 9th. So no real catalyst in the future, just oil. PanW, when I say oil, by the way, there is a catalyst of oil supply and demand. As China opens up, as Russia pulls back, as OPEC pulls back, and as the U.S. is reluctant to open up new drilling, you have a supply issue. Palo Alto Networks, I love this one up here. 200, anything over 200, I say you sell it. Anything about 160 to 180, I think you buy it. It's got this gap down here, which is going to be a magnet. I personally own it. I own it in the long term. I think I'm over 1 year on some shares. I'll probably look to sell some of those long-term gains so I can take a 15% instead of 20% tax bill. Pepsi, same thing as Coke. Their earnings are coming up April 24th. Great company. I think you buy it anywhere about 170. The 170 handles where you want this one. QCLN, this is my clean edge energy. It's a ETF. Hasn't been doing well at all. Not at all. I mean, up here at 57, you're down here at 47. Had a bunch of buy-ins. The algorithm loses you 11% buying and holding this one, loses you 31%. It's just been the clean energy trade. Just hasn't been a good trade. Qualcomm, I think 112 is your swing point. Say 115. It's at 117. Their earnings are coming up on May 3rd. Roblox, it's almost under 40. This is a hype train. When it's under 40, you buy it. When it's over 40, you sell it. You can wait till it gets down here. It's probably going to come down here to about 32 or so. I think that one. Remember Shopify had earnings. I said, yeah, you probably want to sell before earnings on this one. This was back in February. They had their earnings. They gapped down. I said that gap's going to get filled. And I said, wait till it gets to 40. Never really got below 40, but it got it to 41. You got a 10% gain right there. You got back in at 48. I think you're going to cover this gap to 52. So 48.93, I think you're good buying at 48.90. As long as you're okay holding, your earnings are coming up May 4th. That's the danger, is that earnings somehow do worse. I don't think they'll do worse, but God. Snowflake, Snowflake's getting ready to pump either way. This one is one that I bought and I hold for long term. I think my average purchase price is about 150. That's where it's been capitulating. That's where it's putting in its platform. Now, if the market turns around, if Snowflake does something wrong, could get wrong. Simon Property Group. I say anything about 110 on this one is a great buy. I've liked this at 120. I've liked this at 130. I've also liked this at 60 and 70. I traded this one throughout the pandemic. Target. Remember I said that gap up to 177 was going to get filled? Well, it did. It did. There's another gap up here to 211. I think that one gets filled as well. Do you want to buy in here? I'd say 150 where it probably will hit at some point. Your earnings are coming up May 16th. Let's look at Tesla. Tesla, I don't think it's done going down. You're down here. I think you're going to cover this gap down to about 150. In the 150 handle, I'm adding to it. Simple as that. Taiwan Semiconductor, 85. Don't add it. I think you can get down to about 70 on this one. Uber, almost under 30. When it gets to under 30, load up on it. You're at $30.83. You can load up on it today. I think it's at least a $40 stock. United Healthcare, we've talked about. Anything over 500, which it did get up to 527 here, you sell. Anything under 500, you buy. Same as Costco. Same damn thing. Walmart at 152. It's still a good value. I mean, if we're heading into a recession, I do all my grocery shopping at Walmart. So the one that I have is XLY, Consumer Discretionary. I kind of picked this one this year as my pick of the spider sectors that I thought would perform well. So I have this in the core portfolio. XOM, Exxon. I think this is at least a $120 stock. It's at 115. Decent dividend. I think of all the big oil producers, I think that's the one that I'm sticking with. So let's talk about scans now. Earnings this week, by the way, if you want to see the earnings this week, I'm not going to go over all of them. You can go to earningswhispers.com. Earningswhispers.com is the best site just to look at the earnings, see what's up, what's coming up, what's getting traded. They'll tell you the top ones before the market, after the market, based on the calendar. Square or Block, SQ, it had a cross up at 63.48. 63.48. I personally own this one at a significantly higher price. You got this gap up here between 70 and 72. I think you're fine buying it here. Honest to God. The RSI is down low at 42. I think you're good. XLP, we talked about sectors. XLP is consumer staples. This one had a secondary cross up. The initial cross up was at 72. You're trading at 76. I think you're putting in double tops here. So I'd be a little bit concerned that it is getting toppy, but it did have a cross up. It was a secondary cross up. Norwegian Cruise Lines. I've traded this one in the past. It is super expensive, and it's capitulating down here between 12 and 13. It's right in the middle. Their earnings are coming up April 28th. You could be in for a big pop because I do see that the gap has been covered, but it's under its 200 day. And I think, again, are people going cruising? If your family's cruising, buy Norwegian Cruise Line. Annaly Capital. This is for, like they say, Virginia's for lovers. Annaly Capital is for the dividend lovers. It's the Virginia of dividends. NLY. This has a cross up here, and it's a secondary cross up. The initial was at 1884 back on March 16th. You're trading at 1934, so it's a buck higher than where the initial one was. But you're seeing it's kind of putting in that floor right here at 1848. So here's what you have to know about Annaly Capital. Long term, it's probably going to lose you money. The dividend is at 13.44%. Yes, I said that right, 13.44%. And its dividend X date just passed on March 30th, so you don't have another dividend until it looks like it may pay quarterly dividend. So you may have one coming up soon in June. But here, April 26th, you can see it reverse splits just to try and keep it in that $10 range. So I personally don't think that it's worth a long-term investment, But if you love dividends, Annaly Capital. PG. Oh, and the reason, and if you're new listening, the reason I don't love dividends is because if you pay out a big dividend, and oil companies are famous for this, if you pay out a big one, you typically don't reinvest in the business. So you trade growth for your dividend. Simple as that. Procter & Gamble secondary cross-up. Your boy owns, what, 1 or 2 of this in my Weeble account. I am taking a Weeble $1,000 challenge for the year. So Procter & Gamble is one that I hold. I just love it. And it had a secondary cross-up, but it's probably too expensive. Buy it in the 130 range. It's trading right now at 155. You'll probably have a chance to get it. CEG, Constellation Energy, 76.33 is the cross-up right here. Your earnings are coming up May 3rd. This one has been on a slide. If we look at this one from let's look at it from a pandemic standpoint. I can't even pull it back to that date. Looks like this one's a little bit new, but CEG is one. These are just big boys that I pulled up on most of the indices trackers. Mondelez, this one has been a monster. Mondelez, 65, looks like 65 was the initial buy in year, 71. This is another cross up. So it's doing really well. The MACD kind of came down, but the stock price just kind of hovered, which is a bullish. The RSI is at 62, so you have to be worried there. Eli Lilly, LLY. This is one that has the secondary cross-up. This has been a monster as well. 319 was the initial buy. You've covered your gaps. You're at your high. It's a little bit extended for me. Colgate-Palmolive is the final one, CL. Colgate-Palmolive, you had the initial one at 73. I think anything below 80 on this one, I think you're good. Go to Colgate-Palmolive. I mean, what's the 52-week price range? Yeah, you're 8% below your 52-week high. But brands have pricing power in this economy. So they've been able to raise their prices and keep their stock price up. Their earnings are coming up April 27th. So there you have it. That's the podcast. I will be back tomorrow, hopefully. I am sick. I'm still sick. And I'm in New Jersey. Wednesday night, I'm flying back to Atlanta. So Thursday and Friday, I should be back to my old self in my home in Atlanta. And I won't have the dogs to get let out either. If you are paying more than $30 for your phone bill, Visible is a sponsor of the podcast. Go down below, sign up for Visible Unlimited. It is $25 a month. The link below gets you $20 off your first month. If you've got an eSIM, just sign up and try it. It's $5 because I save you $20. So your first month will be $25 on the low plan. I think it's $35 on the higher plan. So if you want the higher plan, which basically gets you the equivalent of Verizon. You're not rate limited until you go over like 150 gigs. So yeah, on that higher plan, the higher plan is great. I do the lower plan. I don't particularly see any problems. I don't see rate limitations. I don't see anything of the sort. So go down below and do that. If you like the charts that I have, if you like the algorithm that I have, TrendSpider, sign up for TrendSpider. There's a link down below. And you can get 25% off with the code DSP25. If you have any questions, hit me up. I will be back. I am on YouTube daily. Remember, just go over to YouTube, sign up for YouTube. Yeah, we got a bunch of people listening to this one on YouTube. Earnings week. You can trade around earnings. The 65-minute algorithm on TrendSpider is great to trade around earnings. You can scan with it too. I've got a scan based on it to find out which group of stocks you want to trade. So if you have any questions, hit me up. Join the Facebook group. All the link tree is down below. Thanks, you guys. Take care. Okay, I got interrupted about 6 times. Oh, I gotta get the dogs. Oh, they did. Good, yeah. Okay. I'll go and get them.
Good morning.
Okay. The guys are here to do the floors. Why can't I rewind the video? I don't know why you can't rewind the video, Jonathan. Oh, I didn't know the judgment was already in, Christian. Let's see. I'm going to export to disk. It's been a while since I did this mofo. So let me see if I can get... Brian, I think Spotify might be a good bet, to be honest with you. Let me look at Spotify. Dude, see, the problem with Spotify is it's just run up so much. And the valuation's just not there. See, because look, they're not earning money. The 2 times per sale. The stock price is 2 times per sale, which isn't crazy. If they announce that they're making money, I mean, their average target price is 136, and they're trading at 133. But if they announce that they're making money, or if the App Store on Apple allows, side loading, then I think Spotify gets crazy good. Oh, and your boy has to blow his nose. Why is Active Trader Pro? There we go. Let me load up. Oh. Text me. Jonathan, I don't know. Can you rewind live video? Does it let you? Okay. Oh, let's hope the damn thing loads. There we go. I think it's loading now. Do GarageBand, quit GarageBand. Save. Getty Images. Wow. Getty Images. GETY is up 43%. Oh. Okay, I may have to let you go while I upload this stuff. Because I can't do it while... Oh, there we go. Active Trader Pro. Let's see. Oh, come on. No. There we go. Do I think it's run too much? Here. Let me move you back to Safari. So it depends on your time frame, Joe. If your time frame is 4 hours, here's the 4-hour algorithm at 103. It gave you this 103. I mean, you're only talking about 80 to 100 on a stock like Amazon is not crazy, because look at their 52-week range is 81 to 156. So you're still in the middle of you're 31% below your 52-week high. You're 31% above your 52-week low. You're right in the middle. So has it run too much? I'd say for 1 year, you're just in average price, price. The average target price is 132. So it's not even at its 156 52-week range. It's at 132. So I personally, I wouldn't worry about it. I'm long-term on Amazon. I'm not short-term on Amazon. Here, let's see. Oh. What's Getty Images? Hold on. GETY. That's where it is. GETY. Wait till you see this pop. Boom. Boom. $5 to it's trading. It went all the way up to 10. That's crazy. I should put Getty Images in there. Okay, let me see. I got you on there. I got to go to my dashboard. It's been so long since I logged in here, it didn't even want to let me log in. Ooh, I was going to say, you owe me a couple $100, Spotify, since I last cashed out a couple weeks ago. And it didn't tell me that I needed anything. Create an episode. Browse. 424. There we go. Yeah. If you think it's going to go at $7, you have a 30% upside. I didn't see the per share dollar amount. Oh, it's halted. That's why it's halted it. No, it's back to trading. It's at $8. So $8, you can make your 20%. 30%? It'll hit $10 by the end of the day. Oof. And by the way, good morning, Mike. Oh, boy. Oh, Jim Cramer's hyping Ford again. Oh, we get another morning of Jim Cramer talking about how good the Eagles are. Oh, you know what? You lost in the Super Bowl, motherfucker. You know what? We just paid Daniel Jones to beat your... They put all their money into Jalen Hurts. Let me copy this. Save episode. We're going to go to the episodes. Getty Images, man. GETY. You're up at 8:30. Remember I said buy it at 7? You'd be up some money. Just remember, any reaction in the market is an overreaction. So be careful. Episodes. We're going to copy this. And four, 24, 23. Okay. Boom, boom, boom. Publish now. BAC, Cleveland Cliffs, Cost Disney, Google, Goldman Sachs, Coke, Meta, MPLX, Merck, Moderna, Microsoft, Nvidia, Oxy, PanW, Pepsi, Qualcomm, Roblox, Shopify, Snow, Roblox, Shop, Snow, SPG, Target, Tesla, TSM, Target, Tesla, TSM, Uber, United Health, Walmart, Uber, UNH, and Walmart, Exxon. Okay, so 19, we'll take out those. Okay, boom. And we'll say Getty. Okay. Boom. Yeah. I don't think it's over. Brian. I don't think the banking scare's over. Hold on one second. Analytics. I don't think the banking scare's over. I think there's still stuff that's going on. Let me see what Getty Images is at now. $8.10. If it dips under 8, I think you should buy. I don't think it's over, but I think banks like JP Morgan, banks like Bank of America, Wells Fargo, Citigroup, Goldman Sachs, I think banks like that, I think that scares over. The only thing you're going to see is if the Fed basically imposes on those banks insurance that hinders their profits in order to insure the smaller banks. So, but I'm not afraid of holding bank stocks and XLF and things of that sort. I think you're okay there. Okay, I'm going to close that. I'm going to close that. And I think with 12 people watching, I think I'm going to end this one. Chris, I just read the big dogs have been, they say they're going to have to shut down Surge unless they sell. There is no way that the United States government will allow, they will make them a utility before having to have them shut down. Google ain't going to shut down Surge. Now, does it give Microsoft a lift on Bing? Yeah. But I have to drive a couple of hours to the, it's Costanza time. There's a reason my parents are called the Costanzas. We're driving in a couple of hours to the beach to spend 30 minutes at the beach, then go out to dinner, and then drive a couple of hours back only to go to sleep and wake up tomorrow and have to leave the house again. But Wednesday, I'm back in Atlanta. Okay. I am out, you guys. There's what I'm looking at, by the way. on Safari. I think I went on Amazon for you, Joe. I think I looked at it here. I showed you. Go to Fin. I mean, do I think it's run too much? No. Let's see. Insiders. Sales at 104. The web services dudes, they're selling, they're putting pools in their backyard. The last thing over $1 million. I mean, this guy total probably sold what? $200,000 worth at just 100. There's $1 million. Amazon.com sold $7 million worth. Nobody's been buying. But you know who you don't see? You don't see Bezos. When Bezos starts selling, that's where you're kind of nervous. He ain't selling. But look, reiterated, they moved it down to 125. That's why your price got moved down. Here, January, Credit Suisse said 171. I think you're good here. I think you're good. By the way, I told somebody I am in the process of writing a kind of a guide. I don't think it's a book. It's more of a guide. Okay, before you start hearing banging, and banging by like, wood banging, not like the bed's behind me, not like that banging. I'm out of here. I'll see you guys tomorrow. Take care. Thanks, Brian.